So excited to welcome you to another webinar by sFOX. The title of this one is Understanding the Role of Staking in Institutional Asset Management. And in that spirit, I'm so excited not just to be chatting with some great thinkers and minds from sFOX, but also to be featuring Gemini here to share their perspective on staking and its role for institutions with us. I'm Aaron Suduko, the head of content for sFOX. I'm joined by the head of product at sFOX, Jackson Finio, as well as Franck Kengne, the lead product manager of staking solutions at Gemini. Franck, Jack, I'm so excited to have you both here. I know that simply from talking to a range of institutions, both inside and outside of crypto, staking, while it's been around for a little bit at this point, is still something new, something that's interesting and perhaps hard to wrap your head around, especially if you're coming from more of the traditional asset space. And I know it's something that both sFOX and Gemini have thought quite a bit about. So I'm excited to chat with you about it. Audience, I hope you enjoy this too and get a lot out of it. We're probably going to be talking for the next 40 to 45 minutes or so, but it's a webinar. The more interactive we can make it, the better. So if you do find yourself with questions that you'd like to direct to our panelists, either individually or jointly during this time, the Q&A box is open. We'll be monitoring that. So please, we want to make this as useful as possible for you. Please feel free to take advantage of that. We do have some questions to kick off the conversation ourselves, but before we do that, Jack, Franck, wanted to give you an opportunity to introduce yourselves, tell our audience a little bit about what it is that you do at sFOX and Gemini.
Yeah, thank you, Aaron. Hey, everyone. I am very happy to be here. I'm excited to talk about staking. I have been at Gemini for about 3 years now, and we have been really talking to institutions, trying to figure out they are in this space. It is new. How can we help them? So staking is one of those products that came out of these conversations, and really, yeah, I mean, I am here to really just try to dive deep and talk about staking or talk like at the surface. I'm just here representing like a bigger team. So even if there's a question here that we can answer, I'm sure someone at Gemini could answer it. So yeah, I'm excited to be here. Thank you for having me, guys.
It's a pleasure. Jack, how about you?
Yeah, thanks, Aaron. Yeah, as you mentioned, Jack Finio, head of product here at sFOX. Also been with sFOX for about 3 years, just over 3 years. Been in the space for a while overall. Prior to joining sFOX, founded a systematic fund within the crypto space. And yeah, we at sFOX, we built a kind of vertically integrated platform. So we cover many different aspects of the crypto space, staking being one of them. And yeah, I think it's, as Frank mentioned, very important for institutions and professionals to have access to this opportunity. And yeah, lead that initiative internally as well.
I love that. It's a pleasure to have you too. Well, gentlemen, let's jump right in. As I said, we're thinking primarily about institutions and how they can wrap their heads around staking, as well as professional traders. Let's start on the technical end. So maybe some people have shown up here and they're really familiar with staking. Maybe they already stake, but maybe they're also just exploring it for the first time as one aspect of digital asset management. So from a technical perspective, let's give a little background in terms of what staking actually is, right? Some blockchains use it, some don't. What's the best way to wrap your head around this when you're starting from Jump Street on it?
Yeah, thank you, Aaron. The way you think about staking is it kind of came out of this proof of work concept when we were talking about Bitcoin and people were saying it was decentralized. Essentially, people are running a lot of computers, and once these computers are agreeing on what is happening in the network, then that is how the blocks are actually created. So let's say if Jack sends some money to Aaron and Frank, just like an observer, I'm going to propose that. And if I get selected, then the network will reward me for that. So it is a way to increase security. But the issue with proof of work was that it became very energy intensive. So people running all of these computers, the way that people were being selected previously was that whoever solved this mathematical problem gets chosen to actually generate that block. But the issue with that was that if everyone started running all of these computers, that might be a little bit problematic. So proof of stake was a different way of selecting who actually gets to be selected. So the way that this works is people actually pledge some kind of token. In the case of Ethereum, you pledge 32 ETH that you are going to be a validator. So 32 ETH is actually there. It is just a way to make sure that people who come there are going to perform in process this transactions in good faith, because if you don't have any pledge, then you could just lie and there will be no sort of repercussion. So staking is essentially people come to pledge this 32 ETH, they run computers in the back and they observe what is happening. So every once in a while, the network will call on them to perform certain actions. So if you perform correctly, then you're going to see your 32 ETH grow. But if you don't do it, you might get penalized. And as you can imagine, this involves running a hardware or a software. You will have to manage your own keys. So there is a lot that goes into really being able to run these computers and actually holding the keys of your crypto. So at Gemini, even though customers just go in and click on the button to stake, actually in the back end, we are securing customer keys and we are running all of these mini computers that we call validators that are actually listening to transactions that are happening on the blockchain. And when we pick to provide this information, we will provide it. And every once in a while, you get picked to actually validate what happens. So this is essentially staking, just listening to what's happening on the blockchain and making sure that you aggregate the information accurately and create these blocks that we have.
Yeah, I think maybe just to add on one thought there, I think in both proof of work, we have miners, and proof of stake networks, we have, staking, but really all of this boils down to an economic incentive for proper decentralized transaction validation and decentralization overall, right? It's just a different method of that economic incentive. In proof of work, as Franck mentioned, it's expending energy to solve a problem in order to be rewarded with new, let's say, Bitcoin, for example. And with staking, it is I am kind of pledging my assets in order to increase my chances of winning the next block and earning the fees and new assets associated with validating that next block. And I think it's really interesting, kind of solving a similar problem, kind of across decentralized networks in different ways, both with kind of pros and cons, of course. But I think it's the key there that Franck mentioned it was the expending energy with kind of traditional proof of work mining versus more direct economically incentivizing and pledging assets in order to win blocks on the chain.
That's really helpful, guys. Thank you. So we have this idea of basically securing decentralized networks through economic incentives, which can be modeled differently depending on which factors you want to prioritize or how you want to manage things like energy. I love that. Great from the technical perspective. But now let's say I'm a portfolio manager. All right, maybe I'm now running a digital asset portfolio for an institution. Maybe I'm working individually. Why is this technical aspect of digital assets worth my thinking about? And what's the best way for me to get into it in the first place? And especially, I find it useful myself when I'm explaining novel aspects of crypto assets to try to draw analogies with what asset managers might be familiar with from other asset classes and more traditional financial markets. Do you think there are any useful analogies there to help people wrap their heads around how this can actually be used as an element in portfolio management?
Yeah, I think overall, right, staking, the economic incentive is clear, right? There's the opportunity to receive rewards, as part of kind of participating in staking overall. But really, as a long-term kind of holder of an asset, staking is also an act of kind of participation in the health of the network powering, the underlying token overall, right? And I think an analogy, I mean, really, take any example of an act other than directly investing in an asset itself. that promotes the success of that asset long term, as your analogy. I mean, I guess you could say, promoting good decision making within a company that you're invested in, right? But on a kind of decentralized scale. And I think that's, for any kind of longer term holder of an asset that's powered by a proof of stake network, staking is critical to, to that participation, to that kind of long-term health, to the decentralization of the network overall, and should be a, critical element as part of holding that asset itself in your portfolio. Then, on the active trading side, obviously there's the reward element. There's, an opportunity to essentially kind of, boost gains while you're long an asset by staking it at the same time. But that's, less so about really being involved in the network itself and more taking advantage of the opportunity that's presenting itself on a shorter time scale.
Yeah, I mean, Jack answered that perfectly. Because a lot of people just view staking as, oh, you're getting some kind of reward. But what I really think that should be important here is that anyone participating in the Ethereum ecosystem, whether you are a builder, you really start with making sure that the system is secure and also decentralized. So staking is actually a way for institutions to kind of pledging to this cause of making sure that you have enough validators out there doing work, and also making sure that you have enough validator to ensure that the network will be secure. And of course, you have this incentive angle to it. So, so staking is really the way that I kind of think about it. If you are going to just hold ETH, for example, if you, like you were able to get like some ETH, they're just sitting there, you don't intend to get rid of them. A better way to use it would be to support the network. And once you support it properly, you actually get some kind of incentive out of it. So these days, really, I think that many people just have dormant ETH and they say we support the network. What I think that really the real support comes in is when you are actively participating in the security and the decentralization of the network. And this is really what staking offers to institutions or any high net worth person.
And
I love
Franck,
that.
Too. Sorry,
No,
but as product developers, kind of within our respective platforms, right? That's such a critical element of why we're building these solutions in the first place, right? Our clients are institutional investors. They're holding these assets within our respective platforms, and to participate in this network, in this opportunity, supporting your investment, it's critical for us as product developers to ensure that our clients are able to easily kind of take this action, right? Yeah, I think that's a large part of why both of us are probably here and excited to talk about this. But yeah, I just wanted to add that in.
Well, I'm excited too. So let's dive further into that for a moment, because you both are product leaders thinking very intensely and meticulously about what it takes to stand up an institutional solution for something like staking. So I'd love to open the floor just a little more broadly in terms of what you were saying, Jack. Maybe you can walk myself and the audience through how you approach that development process, the kinds of challenges you were looking to solve, and what opportunities you wanted to provide to the end users at Gemini and sFOX through the development of these solutions.
That's a great question. I think, kind of what I was alluding to before is that, first and foremost, our goal is to ensure that, our clients, especially on kind of the institutional side, professional kind of investment side, have, kind of safe access to the opportunity to stake itself, right? That's key. This is, these investors are, either kind of early investors in the network itself, and obviously are incentivized to support its health overall. And then kind of secondarily, that's when we focus on kind of the unique aspects that our respective platforms can provide to those investors, right? Within sFOX, that's very much focused on capital efficiency, the ability to manage price risk while staked, reporting as well. That's kind of a critical element across all kind of transactional services here. And then, of course, kind of the safety of that access itself, reliability, and ensuring that the assets are always secure and well maintained. And yeah, that's kind of how we break down really a lot of the product development, even outside of staking too. It's critical for us to first provide that access, and then solve critical problems around the product, in order for institutional investors to really take advantage of that opportunity.
At Gemini, we usually try to start with customers, because you have like an institution out there that might be technical, they could potentially run their own validators, they could store their own keys, and that's great. But when you do that, you have to be technical. So you have to be able to safely store your keys. You have to be able to run all of these virtual machines or hardwares. You have to be tracking the protocol to ensure that you have like the most up-to-date upgrade or update. If you don't do that, you might actually lose your asset when you're trying to support a network. So when we started, we found out that many of institutions that came to us, they were in the business of running like the business. They were not technical. They're looking for someone who can actually come and help them just like remove some of this pain point that like I kind of mentioned. And this is what we're good at. We are good at running blockchain systems. And so we have a dedicated team 24/7 monitoring the whole ecosystem to make sure that our customers always have the best service, to make sure that if anything happens, we will be there to act quickly. And kind of also what Jack mentioned, you will also need to be tracking, institutions have this internal audit that you need to do. So our reporting is definitely something that we invest heavily into, because that is how customers are able to explain what has happened to their own customers or even to whomever they have to work with. So we really try to really act as a software company here, just taking anything like that will be technical off of our customer plate so that they can focus on their business. And what we're doing here is just ensuring that the systems are running fine, the assets are safe, and that they can come back and say what happened. We're like, hey, here's a report to show it. So this is exactly what we're trying to do here. And if anyone here on the call has some problems with their staking solutions that I didn't mention here, we're always here to listen to those. And we are always just trying to figure out what people need and use our expertise to actually put those products in their hands.
There you go. And I will remind our audience on that note that the Q&A box is open. So if you have any questions or indeed feedback on staking, please feel free to pass that along to our panelists. Franck, I love how you mentioned that there are a few different ways in which one can go about staking, between working with a provider or standing up some of the technology on your own. And you've already talked about some of the pros and cons to those different approaches. But given that there are a few different ways to ultimately engage with staking, say I'm an institution, and this question is for both of you gentlemen, and I'm trying to figure out the best way to simply get started in the first place with the blocking and tackling of going from 0 to 1 in terms of introducing staking to my workflow, my portfolio management, everything in between. How do I go about doing that? What are some of the decisions that I need to make, and what's sort of the easiest way to get up and running with it?
Yeah, so there are a few ways that you can go about this, which usually start with, like, what are you trying to do? Are you trying to support a community? Are you trying to safeguard like your asset? Are you technical? And those kind of questions. And what we have seen is that many institutions may have different mandates. And that also drives sort of the solution that they go after. So at Gemini, we have a pool, which is essentially customers can, if you don't have 32 ETH, for example, you can put your money inside that staking product, and you guys will get like the reward like proportionally. With what we also have Staking Pro, and this is really where the the barrier of entry is way higher. You need to have 32 ETH. You need to be technical. You need to understand that that like your incentive that comes in will be inconsistent, because you might not get picked every day to, for example, propose like a block if you don't have enough validators. So what really goes into it is, what are you looking for? If you're looking for on-chain reporting, I would say you want to stand a segregated staking operation, because that will allow you to view your own validators, which we have on the platform. So customers staking in Staking Pro today, when you stake, we will tell you where your transaction is in the flow. So we will tell you if it's in the activation queue. Once it's activated, we will give you your validator addresses, and you can use those addresses to even like a sort of double checking what we are reporting. And this is sort of some of the flexibility that you have when you go with a segregated staking operation. Or you can use some of the pool solutions, but that one would not be as granular of a reporting. But the advantage that you have there is that as part of the pool, you will likely have a lot of validators, which means that you will have a more smooth out sort of incentive coming in on a daily basis. So it kind of depends on what the institutions are looking to do. I would say if someone is just looking to learn about how staking works, you don't have 32 ETH. Maybe you start with a pool. Once you get comfortable and you have, like, I'm sure they're going to have like reporting requirement or regulatory requirement, then that's when a segregated operation comes in. What we have seen at Gemini, we even went as far as some customers need to have their wallet addresses being completely segregated from everything else. So we create dedicated wallet addresses, dedicated validators, and all of this process, like this is segregated, but it's even one step further than Staking Pro. So really it is depending on what the institution is trying to do. And as we take those requirements, we try to understand how our system works, and we can advise them on whether that is off the shelf or something that could be custom made. But for now, like custom made, generally you have just like a classic pool, and then you have a classic segregated, and there could be many other layers, just like kind of depend on what you want to do. You don't want MEV, do you want MEV? So there are different type of things in there depending on what the customer wants.
And yeah, just building on that too, I think because our mutual kind of staking solutions are somewhat similar in many ways, focusing on kind of another key area, just for potential stakers to be aware of. There's different kind of requirements across different networks, right? Franck was alluding to kind of the ETH staking minimum, which is generally 32 ETH. That varies widely kind of across networks, as do the time periods associated with staking, how long it takes before a stake is active. In some cases, there's a minimum amount of time that assets have to be staked, and then in other cases too, there can be a long kind of unstaking period as well. Like with Polkadot, for example, right? It takes 28 days before from when you unstake the command assets to where they're actually unstaked. And in the meantime, right, you face price risk, and you're not necessarily earning rewards. So we aim to make kind of all of these decision factors very clear upfront and during staking, so that our clients can manage those risks accordingly. And then, taking that even one step further, right? There's also the concept of staking versus delegation, right? Where staking is more physically pledging assets to a validator node, right? So physical kind of movement of assets versus delegation, which is typically like a network kind of allowing more of the average user to participate, typically kind of lower minimums, and the assets, while technically kind of quote unquote staked, right? They are kind of maintained typically within your own wallet still, just not able to be transacted with otherwise. And depending on the network that you're looking at, this drastically changes kind of the risk profile of that position, let's call it. As does the method, whether it's staked or delegated, given kind of the time period restrictions. So again, outside of just informing our users about, what those requirements are and how that may impact them, also giving them the tools to manage that risk, even, for example, the ability to hedge assets that you have staked, so you're not, kind of facing that same price risk profile.
As I have to say, I mean, I work in crypto, and even with all of the fine distinctions that you're drawing between different kinds of staking, my own head is spinning a little bit. So, I mean, I can certainly appreciate a platform like Gemini or sFOX providing a lot of that information about how staking works across networks for their end users. I do find myself wondering, though, like if there are institutions or professional traders on this webinar who are thinking about engaging with it on their own or just trying to learn more about it, I'd love to just get your personal perspectives in terms of what the easiest ways are to learn about these different networks, how it is that they implement things like staking, whether any changes happen, and how to keep up to date with that. Like in a sector that is so frequently evolving and changing, and different networks that can oftentimes operate very differently from one another, how do you stay grounded and apprised of all of that, especially when you're doing something like dynamically managing a portfolio?
Yeah, I think that's can largely fall to Franck and myself to give our clients the tools to kind of manage that. Yeah, would love to hear from participants here too, how maybe they're currently staking today, things that they care about and look at when it comes to managing staked assets. That's obviously, as Franck mentioned, right, that's the customer feedback that we really look for in terms of solving and improving on problems or issues that our users may face, staking kind of elsewhere. Yeah, I think that's also a key element of the stake on your own versus on a platform like sFOX or Gemini, where when assets are staked within sFOX, it's kind of a more holistic view of your portfolio, right? Because it's your assets are both that you might be trading with or holding in custody or staking are all in the same arena platform, so you can more easily manage the different risk profiles across those various investments or positions versus when you segregate that out and maybe staking, let's say, from your own node or wallet, delegating from your wallet, that kind of separates that part of the portfolio from your overall portfolio. I think that's a large advantage of operating on a platform like sFOX or Gemini, where you can kind of manage your entire portfolio end to end in a single place.
Yeah, so staking is very nascent, so it all depends on the network and protocol that we're talking about to get the information. You have some well-established networks out there. I want to say something like Ethereum. They have extensive documentation if you go to the Ethereum foundation, and many network will also have this governance. This is one of the beauty of blockchain. There's nothing that just gets introduced to the protocol. People need to actually agree, and many times this is really where staking becomes very important, because as a staker you have a say in what get to happen. So when you follow some of these governance protocols, like you can kind of see what is going to be coming up to your staking mechanism or your staking system. And you could even check sometimes, like if something is like new, that will likely be documented in like the GitHub. What we do at Gemini to kind of save the hassle, like this is, this takes a lot of time. You have your whole team looking into this. So we have like private channels to some of these networks that, because they know that we manage such a lot of customers' asset, they reach out oftentimes saying, hey, we have this thing coming, are you guys ready? And we can position ourselves to be ready for that. So if someone is curious, they don't want to maybe get the Gemini emails about the updates or just things like that, you can go to the protocol web pages, check out like the governance channels. You can check out like the GitHub and whatever thing that you can find out there. it's kind of sad to say, but crypto Twitter is a real thing. So that is also a good source of information. So whatever that you want to do, crypto is very new. So if you really want the information, you will kind of have to try to piece out all of this information for yourself. But by working with, sFOX or someone like Gemini, we actually able to partner with this project team directly. And when they have meaningful protocol improvement coming, they will let us know, and we will have our team will act on that quickly. And they usually give us, try to figure out the time it would take for us to implement, and we work together to make sure that things happen. If there is any breach, like security breach, we will find out probably before the nuke break, because we have these private channels. So this is really key to our business, to just ensure that we are up all the time and that we are providing the optimal solution. You just have to find your own channels to be able to be as reactive and as you can.
Well, there you go. I think that's the soundbite of the webinar. Institutions cannot afford to stay off of crypto Twitter. There you go. Make your accounts. I don't mean to put words in your mouth, Franck. But it does segue nicely into the last question that I wanted to ask both of you about, which is, as you mentioned, Franck, staking is pretty nascent still. Crypto itself is pretty nascent still, right? For all of the attributes of it that make it an asset class. And it's rapidly evolving and changing. And I must imagine that as product developers and innovators in the asset management side of it, it can be challenging for you to kind of balance the need to keep your end users apprised of and able to engage with the full breadth of the ecosystem, while also making sure that the overall package of Gemini products and sFOX products are scalable and battle tested and reliable. Because oftentimes I feel like there's this sense that as the latest features come out in crypto, maybe that's where a lot of the opportunity is, but maybe they're still working out some of the kinks, and you don't want to invest too much in it too early. So as product developers, how do you two think about managing those two considerations in the solutions that you build for Gemini users and sFOX users?
So the way that we think about that is really, we have so one of our main, if we do one thing at Gemini, it is ensuring that customer assets are safe. That is the cornerstone of everything that we build. And this is how, we are regulated as a trust. So we have yearly audit, we have monthly internal audit that actually happen. We have to report to so many, I cannot even name them all here, but we have to report to so many people, just ensuring that we actually have customer assets. And one way to ensuring that we keep those customer assets start with building a good product development cycle internally. So even before, I want to be building things all the time, but we have a team of security expert that whatever that I want to build, I have to talk to them first. And these folks look at everything that we implement before we implement them, saying, okay, we can see that this thing is somewhat half-baked, or this is good to go. So we have those kind of checks in place just to make sure that before a client say I want A, and Franck just goes and build A, that A will be safe for that customer to use. And so we make sure that on the security and compliance angle that we have those bases checked. And this is not like a one-time set and done. We have frequent reviews every time that you have a new feature coming in, every time that the protocol has a new thing. Someone at Gemini looks at it, says, let's wait a little bit, or good to go. So we definitely work with that sort of mindset of ensuring that customer assets are always safe, and that we are working with something that will be regulatory compliant. And because I will always want to be building things. So it's good to have these checks just to make sure that we have the best experience and services for our institutional customers.
Yeah, I think Franck, you summed it up very well, right? The key, initial elements, safety, security, compliance, right? That's baseline. I think the interesting thing, kind of as you're alluding to, Aaron, is typically technology firms follow the move fast and break things ethos. Less, obviously want to move fast, but we're dealing with our clients' assets at the end of the day, right? So yes, we can move as fast as we can, but we obviously can't be breaking things too much along the way. It's that those kind of baseline principles of safety, security, and compliance, and then rigorous testing end to end before any product kind of sees the light of day. I think typically here at sFOX 2 we'll just also start small with kind of a solution that solves a key problem, but we're very confident can kind of maintain that reliability, that efficiency, and then that also gives us an opportunity to learn a lot from our clients as to where the product should go from there, right? We might think we know everything, right, and try to solve all of the problems, but those aren't actually the problems, or they are the problems, but this wasn't the solution. And so I think in some cases that need to kind of take a step at a time actually helps our product process overall, and the outcome is a better product long term for both sFOX and its clients.
I love that, and I love that in the fast-moving world of crypto, there are two great companies and leaders who are invested in not breaking things. I feel like that's too oftentimes the exception rather than the rule. We did get one piece of Q&A, so as we wrap up, I would love to make sure that person gets his or her voice heard. So this anonymous attendee asked, how do you approach selling staking to institutions that are new to the crypto space and looking for alternatives, especially in this current very conservative environment?
I think that's a really interesting question. I think overall we talked about some of the parallels to traditional finance previously, right? The ability to both economically gain from staking, but also as a way to participate and have take an active role in the long-term health and success of that investment. Obviously the economics of staking are incredibly attractive. Interestingly, maybe slightly less so in a very high interest rate environment where there's competitive rates kind of everywhere that you can turn. But the interesting kind of quality of staking is that you're not, let's take treasuries for example, right? You're facing kind of the U.S. government as a counterparty in that transaction, right? In a staking transaction, you are facing a decentralized network of software computers all around the world. It's a very different counterparty that you might be facing, but with very similar economics and returns for participating. And I think institutions are very amenable to that opportunity, given kind of all of the other elements that Franck and I have been kind of covering throughout this call, right? Even down to the reporting element, right? Can I properly report to, let's say, my investors on what we're doing with this portion of our portfolio? How safe is it? How reliable is it? And how easy is it for me to access in terms of allocating a portion of our portfolio to that opportunity? But yes, I think institutions are very very interested, and in fact, kind of I think staking is one of the key opportunities that institutions see within the crypto space because of both the parallels to other traditional market opportunities and the upside potential essentially.
Yeah, definitely. Like I totally agree with what Jack just said, and this is a great question. I believe that it starts with what are your requirements as an institution. So we have seen that institutions might have different requirements. So that probably start with that. If you need reporting, you're probably better off starting with someone that has an infrastructure like already built so that you can have those type of reporting. But also, do you have any sort of do you need that capital on a daily basis? Because sort of as Jack mentioned earlier, some network may not let you get your money back or like your assets back for some time. So that is definitely some of the considerations that asset managers need to take into account as they get into staking. Are you comfortable with the delays? And sometimes out there, people are just chasing for the highest incentive. I don't know. You have to do your own research, get comfortable with the risk, the level, the price volatility of whatever you are about to get into. But I will also you can always start small, and if you have the right infrastructure, then you can scale from there. It would definitely be difficult as an institution that doesn't have any resources readily available to dedicate to this to start running their own node. So you could start with a company like Gemini, like sFOX, and then as you see, because working with companies like this, you have folks like myself that are paid to be there to make sure that your experience is actually great. So we are going to be building whatever that you need for your business to succeed, and you can scale from there if you have everything there. So right now we have some out-of-the-box tools and features. You can start small, either by getting just one validator. Do you have the right reporting? Are the incentive good enough for you? Are you comfortable with the delay that it takes before you get like your first sort of incentive? Are you comfortable with the delay that when you need the money or like the asset, you may have to wait? So those are just some of the things that you have to consider. But definitely starting somewhere as an institution, I'm sure you might have some like requirement, like you might want to work with a company that has SOC. You might want to work with a company that has a qualified custodian. You might want to. So those are all of the things that and always feel free to reach out if this is like a non-answer for you, and we can definitely guide you better to make sure that you decide what's best for you.
Fantastic. Well, gentlemen, I think we're just about at time, and I know I've learned a lot, so I hope our audience has as well. Before we wrap, I just wanted to ask any final thoughts or insights or considerations you'd like to leave the audience with as we go our separate ways here.
I am grateful for being here, sFOX. Thank you so much for this opportunity. So it was great talking with you guys about staking. This is something that we've been very focused on this for quite some time. So it definitely feels good to be able to talk about it. And I don't think that this is the final step. I think that there is a lot of improvement to come to the protocol, like in general, and all of this blockchain network really need participants that will not be coming in for the incentive, but actually trying to be part of the community and understanding what is happening, because this is really usually how you get the best insight of maybe opportunities. So by focusing really on what the technology is doing. So definitely grateful for being able to share my thought here today. I appreciate it, guys. Thank you.
Yeah,
Pleasure is ours, Franck.
Aaron, yeah, thank you for hosting too. Also want to echo what Franck said earlier. If you're interested in staking or have any questions or just curious, please feel free to reach out to either sFOX or Gemini about it. We're learning as much from you as we can hope to impart on you as well. So yeah, please do feel free to reach out.
I'm going to cheat really quickly, and I hope you'll forgive me because we were wrapping up, but someone else got one more question in right under the wire, and I want to be respectful of our audience and make it as useful for them as possible. And I think it's a good one on which to end. Another as product developer question. What would you say the biggest challenge is in developing a product like staking for financial institutions?
Yeah, I think I think we've covered kind of a few pieces of that, right? It's maintaining that reliability element, that security element as kind of baseline standards, ensuring that all of the kind of traditional investment tools, requirements, qualifications are upheld within staking like any other investment. Compliance is certainly a big one, and navigating what has recently been very topical within regulation around staking, but Really for us, that is, putting ourselves in the role of a service provider to our clients, rather than kind of a some other type of solution that is not necessarily staking directly itself. And yeah, I think again, we're dealing with quickly evolving blockchain decentralized networks that change on a daily basis, and managing kind of the evolution of both the networks themselves and the expansion of staking too. I think those are key concerns or challenges in product development here.
Yeah, I definitely echo that too. So regulations are definitely one of the one of the challenges that we deal with, but I believe that it's not the biggest challenge. Really, the biggest challenge is making sure that assets are safe, making sure that customers are getting like the optimal service. So just being able to design systems that will be very reliable and also very highly performant. Those are really like the key challenges that we're dealing with. It's not, regulations. There will be whatever that regulations are, to be honest. But I think that we have many institutions that, and part of the solution too is webinars like this, because a lot of traditional institutions come into this space, they expect a certain level of, maybe they used to T+3. Well, like in Ethereum, it could be T+65, who knows? So it's just like things like that, being able to educate, like, oh, why is he today 65, tomorrow 10? So just being able to educate our customers about really what is happening under like the hood, making sure that they're comfortable that we actually hold the assets. Because even though Gemini is staking this, we'll still have the keys that hold all of these assets. So this asset never leave the platform. So customers are usually like, wait, what do you mean my asset that's stake, but you still have it? It's like, so just making sure that we can like walk them through this process and get them comfortable with our securities, with our compliance. And, we work great with regulators, and I believe that that is just something that if an institution really wants to stake, they can even talk to. That is not our main issue. It's really just like the infrastructure and the educational component, making sure that people really understand what's happening.
Amazing. Well, Jack, Franck, thank you again so much. I'll echo what both of you said, which is that I know for a fact that sFOX and Gemini are both deeply concerned with education and helping those who are interested in the crypto sector at any level, whether individual or institutional, to really understand how to navigate it according to their own interests and the ways in which they want to be exposed. So if you're interested in learning more, want to better understand the lay of the land, feel free to reach out to Gemini or sFOX. Plenty of information on the websites, and we will be in your inboxes sharing the recording of this webinar. So if it's been useful to you, it'll be available online anytime. And Franck, I know I speak for sFOX when I say it's really been a pleasure to be able to host you here and be able to chat with you. Jack, it's always a pleasure. But yeah, I feel like I've learned a lot about staking, and I'm looking forward to seeing what the future of crypto and the future of Gemini and sFOX hold.
Thanks for having me, guys. It's great.
Thanks, everyone.
Thanks, everybody. Next time.